And good afternoon, everybody. This is Michael Filigaro. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 future, the ES, for Thursday, April 29th, 2021. The market did actually reveal a lot of information today in terms of trade. And so we're sitting at a decision point again, but it may become easier. The market reached a high at 4,211 this morning, and then proceeded to sell off, not as intensely as the NASDAQ, but still it dropped, get over there, dropped down to 4168, which actually was a support level. And I think that people maybe don't update them as quickly as others, but that was a support level that we had in place from yesterday. And then it just rallied back. Now it got as high as 2 points of the all-time high, and now started to come off again. So here's the situation: we could put a minute 5 there, to a sub minute 5 there, and then a minute 5 again, and then we're going to go up to the intermediate level, and it's going to be completing a minor wave 5 and then a intermediate wave 3. Now, if that's the case, I wouldn't be expecting that, but I wouldn't expect it to take it basically all back. Because here's what we're confronting. If indeed that's going to end it, and that we put a pin in there and say that that's the top for the next several weeks, while the market goes through a corrective phase. And that would be on an intermediate level. So I am going to go out to the 4-hour chart, and then we're going to be able to take a look at what that Fibonacci would look like, because what we're correcting is that third wave, that intermediate third wave. If we put it there, that's what it's going to be correcting. The minimum would be between this zone, 3,906 and 3,718. That's where I would expect this to come down into. And it's really dropping into the fourth wave of one lesser degree, and that's right here. So this is at an important juncture because it might extend yet a little bit higher. And that we can live with because we know we have Fibonacci levels above here. I think we had 4,225. And so there was a zone from like 14 to 25. And we're going to have to allow for that, obviously, because we're still sitting so close to 4,200. 10 points is not a whole lot to go like, well, okay, that's all got to hold and we're going down. So again, by the fact that we trade with what's in front of us, we're going to allow for the market to continue higher and to reach a next level, and possibly as high as 4,300. Again, it depends what's left and what could shake up the market in either direction. Having said that, if this did complete the pattern, and again, it was maybe now we're going to drop in a C wave or a 5-wave structure down, and we're going to have to label it wave C, in which case it would be like from this would be wave A, this would be wave B, and then we'd be looking for wave C. That's a possibility. So we're going to put in some Elliott, some Fibonacci, excuse me, so that we can see. So we're just going to put some extensions on to what that wave might look like. Come up here to 211. Okay, and so what it begins to take on is, again, wave C would then, this would be A, not 4, it would be A. And so we would then be looking for the C wave to be related to the A wave. 100% is 4136. I'd definitely be looking for it to break that low. So that would be too big of a failure for me. But what does work is 1.618, 1.382 of that A wave. Those are also very common. And then 1.618. So 4,089 certainly below that. And actually 4107 is below that. Now we remember that we're coming off or correcting, but again, the market just has this overall bullish tone to it. So things might come in shallow. So these levels, they should hold. But if we have to move this up, and it is a larger immediate fourth wave, that decline has to be much more severe. In fact, this would actually just be wave one of that type of a decline. So we're going to continue to let the market tell us and dictate what's up and what direction it's really going to go in, and where the underlying strength for the market's going to come, whether it's going to be on the buy side or the sell side. The strength to selling as well, don't forget, because if the selling is strong enough, this thing's flying and it's going to go down as quickly as it went up, if not quicker. I mean, this has been a struggle, and it could be nothing to take it all back. They're kind of gang up on the market and off we go. So for tomorrow, we have our marching orders. Again, trading with what's in front of us. If the market breaks higher and breaks above there, we know we're looking for 42.14 to 42.25. Then above that, we have additional levels. Use your Fibonacci on the way up as well. You can redraw it to work where this thing's going to come in. And then it's in a relationship of wave 5 would be in relationship to wave 3. So you can draw Fibonacci's from here, and you will get your next wave up. So upside taken care of. Downside, it needs to start to break down fairly quickly, I would think, because if this is 1, this is 2 of wave C. And then it's going to come down on a third, and it really should take us pretty low. We should start getting out of this comfort zone of coming down to like the 4160s and break below 41. This is why this is this color, because it becomes more of a stopping point and a preferred stopping point for the market. And here is a common, and now it's lined up with the 200-day moving average. So these could be logical for a market to sit, pause, wait, decide. Where do we go from here? But ultimately, I think this thing could give up the ghost, and severe enough. We get enough energy going that people are like, okay, all the news is out. We got what we have, and we're going to reconfigure it. Do I want to hold a long position, or do I want to get out here and see what happens next? So there's a lot of position adjusting, I think, coming up, and we're going to see how that all works out. And that's where we're going to leave it for right now. Remember, trade what's in front of you. Trade using your moving averages. When your moving averages are in alignment on your intraday charts, like the 1 minute, the 2 minute, the 5 minute, that's going to give you a very clean direction on where the market is going. If it's going to continue to go higher or going to continue to go lower. So you need to really pay attention to those. More on that in the next update.